Hello and welcome to today's video, which is titled really provocatively Gold Star Launch. It surely depends what we see in the markets as they go positioning for FOMC. So let's dive into this as fast as possible. I hope you are already familiar with the daily analysis and that you are waiting on Twitter and Telegram to get my latest and of course to talk. So let's move into gold and miners. This is the daily chart where we had seen yesterday, actually twice intraday, a solid rejection of a downside, of a downswing, and it was coupled with a relative strength in the miners. Silver followed through, but that's not the most important thing. The most important one is that gold today has been running quite hard, preemptively, leading the charge, and it really wants to, desperately really wants to front run the dovish Fed hike. This is what I told you in late yesterday's video covering preparations for today that markets would be willing to do. We can disregard stocks for a moment where especially the tech weakness, which is quite inordinate considering, for example, the Microsoft or Google earnings lately, had been really kind of bucking the trend. So on this other side of the spectrum we have gold that is more or less, but rather more mirroring what treasuries are doing, and it doesn't care one iota about Nasdaq. So, stating the very obvious, 1960s are to be safe on a closing basis, because I don't think that Powell would deliver on a resoundingly hawkish note. This is not last year, this is not Jackson Hole. We are still in a disinflationary trend, but the Fed is of course aware of the looming threat of inflation returning, because what had been the key drivers? Crude oil prices decline together with derivatives, be it diesel, be it gasoline. That's what's been driving the decline in inflation, headline core, as much as used car prices. And these factors, this key factor of energy is has turned around, as would be apparent from this very chart, which is capturing how West Texas Intermediate had been on a tear since refusing to break down below 68 at the end of June. And now we are entering the second slightly consolidative period, day when crude oil would defend with ease 78 and probably as well 79. So this still has a distinctly bullish bias, this chart, and no matter that China is buying into its reserves and not consuming that much, there is still enough of a world appetite for oil. Yet, looking at the chart, yesterday's volume was lower than on that more rich day preceding that, so we are likely to see that consolidation which I covered in the opening part of this slide coverage. Final one goes to copper, And sure, 382 won't come anyhow near, not even 386. We would probably be moving around 390 before FOMC, and odds are that especially during the conference, the Powell's message would be taken rather dovishly than hawkishly, because it's still quite a while before the next rate hike comes, and I think it would be more likely in November rather than December, in spite of the relative revival in manufacturing that's bringing it to almost neutral basis in from sagged aspects that would not light yet enough of inflationary fires, but wages would continue to play a part in the Fed's calculations. So we are not likely to see much in terms of copper trepidations today. It would be as resilient when it comes to intraday volatility as crude oil, and that's probably just about it. So we are likely to see some kind of an interesting move in gold, and if I were to say my very, very personal opinion of how this is going to play out in gold, the announcement, it would be only the conference that would help recover whatever setback is present after the statement hits the wires. Gold would need those snippets of Powell's wisdom and views for lighting its fire. So that's how I view the yellow metal for later today, as that's been what you had been asking me either on Twitter or in private messages, and as well on this YouTube channel. So thank you for subscribing, listening, and let's as well spend a few moments talking stocks. These are the outlier, and they have entered the larger trading range where they would be dependent upon the Big Four and broadening market breadth to keep them in the high 4,550 to 4,600 range, and the Big Four is of course industrials, financials, materials, and energy. Discretionaries are as well to be counted on, and the wild card is what's going to be doing on a daily basis. Today it's weak, but I expect stocks to catch a bit when all is said and done during the conference as well. But I'm counting more on a gold upswing rather than stock market upswing, to be very clear. So that's all what I had not been writing in the daily article. Therefore I hope that you had listened carefully and that you are subscribed to this channel and enjoying. Thank you. And finally the disclaimer. Thanks for subscribing, liking, commenting. Talk soon.